Hi friends, today I am going to discuss about investing in stock markets. Basically, when we say stock markets, it's predominantly secondary market, where the trading of equity shares happens through registered brokers on the stock exchanges. Friends, in my earlier videos, I have mentioned that the stocks or equity investments as necessary to beat the inflation in the economy, may it be direct investments in equities or indirectly through mutual funds. In simple words, inflation means rising prices of all the commodities in the markets. So to cope up with these rising prices, we need to have substantial income as well. The fixed deposits or any other debt-oriented investments fetch lower returns, likely to be lesser than 10% per annum, which are not sufficient to beat inflation indeed. The equity returns are comparatively higher and expected around 15% per annum, and hence investments in equities are advisable. The investments in equities means you are buying the equity shares of any of the company. That means you buy certain number of shares of that company, whereby you hold that much share in the capital of that company. I mean, you become the owner to that extent. That's how you enter in that company's business spectrum in true sense. Now let's see how you can earn on these investments. One way is by getting the dividend as a distribution of profits by these companies. The declaration of dividend, I mean when, how much, all these decisions are management discretion. You can check the track records to find out dividends, bonuses, etc. declared in the past by that company. However, you need to ascertain current year's performance of the company as well. Now, let's understand about bonus shares first. The word bonus is self-explanatory, which means without spending anything, you get the bonus shares if you are holding shares of that company. Usually, reputed companies issue the bonus shares in the specified ratio. For example, if the ratio declared as 1:1 means, the company will issue one equity share for the one earlier held share of that company. One classic example is Infosys Technologies, the leading IT company, which has issued bonus shares several times. While you do the fundamental analysis, you can search for such bonus candidates, regularly dividend paying companies with high yield, and shortlist the same for your investments. Higher dividend bonus indicate that the company is doing well and generating substantial profits from the business. However, the main earnings in stock markets come from the capital gains. That is by increase in the prices of the shares, which you buy and later sell them and earn profit. So that's the basic idea. To buy the shares and build the portfolio of stocks is your investment strategy in case you wish to directly invest in equities. So friends, now let's see what are the pre-requirements for starting the investments in direct equities. The first requirement obviously will be the corpus fund. You should have a corpus of at least rupees 5 lakhs to begin with. Friends, that does not mean you should have the 5 lakhs rupees for one go. But mind well that these funds are readily available for you in case you wish to invest at any given time. Now let's understand how to proceed. First of all, please understand the diversification and equitable parts of your investment. This is one of the basics. You should not put all eggs in one basket. So you have to split your corpus of rupees 5 lakhs to invest in some of your shortlisted companies. Now, the second important thing is about splitting. Please understand, you have to give equal weightage to every single idea. That means you will split 10 parts of 5 lakhs to invest rupees 50,000 in each one of your selected stocks. Friends, here we are discussing about investing rupees 50,000 in equities of one company. So you may think that with 1 lakh rupees you may buy 2 stocks and start. But that's not the correct way of investing, as you won't be able to diversify your portfolio. The concentrated investment in 2 companies, I mean 2 ideas, may hit you if these stocks do not perform or if in case they go down instead. So it's always better to have sufficient corpus to begin investments in stocks. Now, let's understand the key part, that is selection of stocks. As a beginner, I will suggest you to start investing in leading blue chip companies, especially forming part of BSE Sensex or Nifty. These stocks are always in focus and limelight. Here, again the diversification comes in picture, while selecting stocks. So, before selecting stocks, you have to decide the sector or industry. You can have 1 or 2 ideas from each sector, so that there will be perfect diversification amongst the different sector and portfolio is not skewed to specific one sector. Say for example, your fine banking stocks are in limelight and rising every day. So you decide to buy 4 different stocks from banking industry. What will happen? Your holdings exposure in banking sector will be 40%. Any adverse news for this sector will be a hit for you. Similarly, if you find charm in the IT sector or say in infrastructure companies, and if you invest without considering the sector-wise allocation, there will be sectoral imbalance in the portfolio resulting in high risk. That's the reason you should select stocks from different sectors. Now for that you need to know the market outlook. That means you should have some thoughts, which industry or sector will perform well or be in limelight in the near future. You may increase your allocation to certain extent to take advantage of such idea. However, disciplined diversification is the correct approach for investing. Please note, fundamental analysis is necessary for detailed understanding on companies, industry, sector, etc., while you proceed for investing in equities. I will discuss more about fundamental analysis in upcoming videos. So now, once you are ready with the selection of stocks, you have to decide about when to buy these stocks. Though you can't always buy at low, you have to take the assistance of technical analysis to support your decision of buying at reasonable rate. Technical analysis is the study of price movement. How the prices changed in the past is being analyzed with various parameters like finding support, resistance levels, moving averages, then the volume-based indicators like accumulation or distribution line, etc. So the buying signals are identified with the help of price trends and patterns formed on various charts. I will discuss about technical analysis more in my upcoming videos. Now, as we move forward, please keep this in mind that you can't time the market, I mean you cannot buy the stock at the bottom or lower levels always. So once you are through with your decision, please decide suitable time to enter and go ahead with your investment in that specific stock. Further, in case the stock goes down after you buy, due to any adverse news, don't be panic and stay invested. Please check the reason of fall. If the same is just usual ups and downs, driven by market sentiments, you may ignore the same. Here, one more important point I wish to discuss. Friends, you are planning your finances and investing for longer term, I mean for your future. So, don't mess up this with the thought of day trading, as you observe usual up and down in these stocks. Friends, the stock market is truly speaking a marketplace, where lots of things are happening, like day trading, arbitrage, speculation, etc. But as an investor we are out of all these businesses. So, mind well, you are not a day trader or speculator, who wants to make quick money, where the chances of losing are more than that of making money. This is in fact my personal opinion indeed. Let's resume on our discussion, friends. You are through with your decision and going ahead with certain stocks which you have selected. The approach of investing will be as discussed. Further, in case you have more funds, you may think of increasing the amount per idea, or else you can keep the limit of 50,000 per idea and increase the count of stocks. Say for example investment of 6 lakhs with 10 ideas of 60,000 each or 12 ideas of 50,000 each. However, increasing the count beyond 20 will be excessive diversification and will be difficult to manage also, hence it is not advisable. Here, you have to increase the per idea amount once the portfolio grows. Now let's discuss about the requirement of accounts to use the trading platform. Friends, due to digitization, you will see lots of online broking facilities available. The basic requirements, however, are: number 1, obviously the bank account, from where you will pay for buying the shares, and when you sell the shares, the sale proceeds will be credited to your bank account. Number 2, Demat account with the depository participant, where the shares you have bought will be held in electronic form, and whenever you will sell, the delivery of the same will be given from that account. Number 3, the trading account with the broker, where you can place your trading order, I mean buying or selling of shares. You can open these accounts with any of the banks and brokerages. Please check your convenience and the fees chargeable while selecting the bank, depository and broker. The fees and charges will be mostly in line with others, but it is advisable to check once before finalizing. That's it, friends. Wish you a happy and prosperous investing indeed. Hope you liked this video and found useful. If so, please do give me a like, which will encourage me to do more such videos. Please do share the same with your friends and relatives, and do subscribe my channel if you like the same. Friends, as mentioned earlier in this video, I will discuss fundamental analysis and technical analysis in more details in my upcoming videos. Thank you and bye for now, till we meet again in the next video.